Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing a muted day today. We're seeing a little bit higher price action, but much less volatile than the previous couple of sessions. And holding that 127 handle, 127.16, so right in the middle of the 127 handle currently. But it is interesting that if you look over the price action over the last 4 days, we're basically back to the levels that it was trading at before that round turn. We did see the last 2 days with higher price action 2 days ago and then some selling pressure yesterday. And now we're back here in the middle of this 127 handle. And I think when you look at some of the driving factors today, a little bit of a mixed data release. We did see the data points pretty much in line, maybe labor costs a little higher than anticipated, but then the Fed testimony on Capitol Hill for the second day still continuing to indicate that they're going to be pragmatic about their approach moving forward, and the markets are, I think, adjusting for that idea. Certainly there's a significant amount of uncertainty out there that the Fed is indicating that until they can get some clarity, that they'll have to see how these some of these issues the market's contending with will impact the economic activity moving forward. And second of all is the non-farm payroll release tomorrow. The market, I think, is waiting to see how that plays out. Yesterday's ADP number, when it shifted quite dramatically from showing a reduction in jobs to a big increase in revisions, and then also a big increase for the month of February, I think has the market, waiting to see how the non-farm payroll number comes out tomorrow. And so we're seeing the markets hovering here, as I mentioned, in this level of where it was trading just a few sessions ago. And when you look at yields now, we're looking at the 10-year yield in a couple basis points today. It's right around 185 basis points. So coming down from 187. So we are seeing, again, the back end of the curve rallying slightly today, pushing those yields a little bit lower from where they were near yesterday's close. But the other interesting dynamic is the short end of the curve is actually selling off, and we're seeing those yields pushing higher. So the yield curve as a whole is flattening today ahead of the non-farm payroll release tomorrow.